Now, with the global economy in such volatility, what should investors do? Let's chat to Brett Evans, who is Executive Director at Atlas Wealth Management. Welcome to our show.
Thank you.
Welcome from Australia, actually.
Yeah, thank you very much.
So, given that we've got all this volatility in commodities, in stocks, in currencies, how should investors position themselves?
I think the hardest thing that people are dealing with right now is any one particular issue is hard enough to take into account what the net effect will be. The fact that we've got falling oil prices, we've got falling commodity prices, interest rates are coming down, exchange rates are coming down. Look, I think going forward, the biggest issue we're looking at right now is what's the global stimulus going to be. We've seen a raft of cuts across the world, ECB, PBOC, the RBA. Everyone's coming through with what we consider a stimulus which is probably required. Where we're seeing things going for the next foreseeable future is more so getting confidence back with the investors and also the consumers too.
So in light of what the RBA and the PBOC have done this week, where do you see the Aussie and the Chinese economies going this year?
Yeah, I think with the Australian economy, we've got obviously a rate cut that's come through. Right now, 10-year and even 3-year bonds calling for the possibility of a further rate cut. That is quite a big stimulus package for the Australian economy. A rate cut's equivalent to about a 1% increase in GDP in the Australian economy. So that combined with the fall in oil prices, which is equivalent to about 2 rate cuts, combined with a 16% fall of the Australian dollar versus the RMB, we're starting to see a lot of catalysts coming through, which will probably help the industrialised companies that haven't done so well in the past, pick up their game. Domestic production in Australia should pick up, exports in Australia should pick up, but also too, I think, from the Chinese point of view, the Australian market is now to become a lot more appealing. In the past we've seen probably the currency being too strong, and they've looked at other markets. Now the Australian dollar, with where it is, I think the Australian is back on the radar screen.
So what are you advising your clients? Which asset classes, how long, what are they doing?
Look, I think anything with strong cash flows, yield is the holy grail that people are trying to chase these days. So with rates coming down, Australia's current cash rate at 2.25%, with European and American rates at 0.5%. The problem people have got is trying to generate a return on their capital. Right now we're seeing strong interest in infrastructure, strong interest in healthcare, companies that have a strong cash flow forecast and consistent earnings over a great amount of time. So that to me is the place that people are going to focus on.
I have friends in the investment banking industry, and they're saying, why aren't Chinese companies going out to Australia to acquire mines at a time when they're pretty much down? What do you think?
I think the issue we've got with the resource sector is the longevity of lower commodity prices. If we saw a tailing off and the possible resurgence of commodity prices in the next 12 to 24 months, I think we'd see that. But I think people are sort of looking at the prices now saying, is it going to be lower for longer? I think the oil and gas prices are very different because the oil and gas sector has a very short amount of continuity. With iron and oil, you need to build the ports, you need to build the train lines, you need to build the mines. With
lower oil prices, you also have massively lower costs for the mines.
Yeah, most definitely. But I think the oil side, you can move a rig around quite easily and you can sort of taper the supply. With iron ore, it takes them 20 years to build up to Rio Tinto's production last year. You just can't turn that on and off. So I think those who have a long foresight in that sector could certainly do very well. There's a lot of Australian iron ore exporters who would love the capital, the price is right, the exchange rate's right. I think it's a matter of who acts first. I think once you see one or two start to go, we saw the deals that Fortescue have done in years gone by. I think that opened the eyes to Chinese investors to say, here's a scenario that does work. Let's see if we can do the same sort of process. So.
Great stuff. Thanks for your time.
Thank you.
Brett Evans, Executive Director at Atlas Wealth Management.